Setting up a corporation for your business offers some of the most lucrative financial planning benefits and opportunities available in Canada today. In this video, I'm going to go through how to set up your corporation for success. Hi, I'm Jay Gagnes. I help make Canadian business owners' goals a reality with innovative financial advice. When setting up your corporate structure, there are three components you will want to consider: an operating company, a holding company, and possibly a family trust. If you're not incorporated, incorporating your business opens many options for innovative financial planning that are otherwise not available if you were a sole proprietor, someone who is self-employed and not incorporated. Incorporating your business will often pay off if you plan to grow your business, as most business owners do. However, it's important to consider that each business is unique, and the decision to incorporate are based on specific circumstances, industry factors, and long-term goals. Generally, we will almost always recommend incorporating, but it is always important to consult with professionals when making the decision to incorporate your business. Let's start with some basic benefits of incorporating. Number one, limited liability. When you incorporate your business, it becomes a separate legal entity from its owners, the shareholders. A shareholder's personal assets are typically protected from the business's debts, liabilities, or any legal claims. Number two, credibility. Operating as a registered corporation signals to clients and partners that your business is established and credible. Number three, access to capital. As a corporation, you can issue shares to raise funds from investors. Selling ownership stakes in the company provides opportunities for growth and expansion by securing additional capital for the company. Number four, perpetual existence. Unlike a sole proprietorship or partnership that may dissolve when there are changes in ownership, a corporation can continue its operation and remain stable even if there are changes in the shareholder or key personnel. Number five, brand protection. Incorporating your business can help protect your brand and intellectual property rights. It establishes and maintains your unique identity in the marketplace. Number six, succession planning. A corporation simplifies the process of transferring ownership to family members, key employees, or outside buyers through the sale or transfer of shares. Number seven, tax advantages. Incorporation allows for more efficient tax planning. Corporations have access to lower tax rates on business income in BC. Corporate income is 11% on the first $500,000, whereas personal income is taxed closer to 54% at the highest marginal rate. Corporations also benefit from tax deductions, credits, and incentives available for research and development, investments, or hiring employees. Click the I in the top right-hand corner for more about the benefits of incorporating. When it comes to setting up your corporate structure, you'll want to start with your operating company. An operating company is your core entity that is engaged in conducting business operations and generating revenue. It is the core entity responsible for the day-to-day activities, production of goods or services, and delivery to the customers or clients. The operating company can exist as a standalone entity or as part of a corporate structure that includes subsidiary companies or divisions. In a corporate structure, an operating company is often owned or controlled by a parent company, such as a holding company or possibly a family trust. Second, and possibly most important, you'll want to set up a holding company. A holding company, also known as a parent company, primarily exists to own and control other companies or assets, as it does not engage in active business operations itself. The holding company is where you will do all of your long-term planning and investing for you and your family's future, as you can move the earnings from your operating company over to the holding company completely tax-free. Remember, the earnings in your operating company are taxed at a much lower rate than your personal income, so it is incredibly important to keep any money you don't need inside your corporation to avoid the higher personal tax rate. Here are some key points to understand about holding companies. Number one, a holding company typically owns a significant portion of the shares or equity in subsidiary companies directly or through a trust. In addition to owning shares in subsidiary companies, holding companies can hold other assets such as real estate, investment accounts, insurance policies, intellectual property, patents, and much, much more. In fact, most things an individual can own, so can a holding company. These assets can provide additional sources of income or value for the holding company as they grow. The holding company structure separates assets and liabilities, protecting the personal assets of its owners, so you don't have to risk the family home. Holding companies are incredibly valuable to optimize tax strategies for capital gains, dividends, or other income streams. Proper tax planning using the holding company can result in significant tax savings. Finally, if you ever sell the operating company, you can maintain your assets inside the holding company and avoid paying a much higher personal tax rate by pulling all the company's retained earnings out of the corporation. The third consideration in setting up your corporation for success is a family trust. Trusts can have many different benefits, including asset protection, privacy, flexibility, and control over the distribution of assets, probate avoidance, estate planning, succession planning, and many more. Generally, if a trust is included in your corporate setup, you would want your trust to own your operating company and your holding company to be one of the beneficiaries of your trust. This allows for you to flow corporate dollars to your trust and then to your holding company completely tax-free. The key tax and financial planning considerations of including a family trust in your corporate setup is the lifetime capital gains exemption. The lifetime capital gains exemption provides a tax benefit by allowing Canadian individuals to exclude taxation of a certain amount of capital gains from the sale of a qualified small business corporation shares. In 2023, the lifetime capital gains exemption limit per individual on the disposal of qualified small business corporation shares is $971,190. This amount is adjusted each year to account for inflation. But if you have multiple beneficiaries of your trust, you can use multiple lifetime capital gains exemptions. Proper tax planning and structuring of ownership can help maximize the benefit of the lifetime capital gains exemption. This includes the timing of the sale, structuring share ownership, and meeting the requirements for a qualified small business corporation. To learn more about family trust for business owners and lifetime capital gains exemption, click the I in the top right-hand corner. Now that you understand the ownership structure and benefits associated with an operating company, holding company, and family trust, you can use these entities to take your corporate structure to the next level. Thank you for watching. Hit the subscribe button and then the bell icon to get notified when new content is uploaded. If you're interested in learning more, we have another video for you. Click here to take a look.